Learn all you can about bad credit computer financing. Computer financing refers to the various methods business owners use to purchase new computers or computer equipment. Many different agencies, including computer and electronics companies, specialized lending institutions, and banks, offer ways to finance buying new computers or equipment. The first source for computer financing that a business owner should consider is the direct manufacturer of computers and computer-related products. Companies, such as Dell, Sony, and Apple, usually offer plans that allow a buyer to make small monthly payments on purchases at low interest rates. Monthly payments and interest rates are calculated according to the buyer's credit report. The better the credit, the better chance a business owner has of paying less. Similar financing can be obtained through retail electronics stores as well, such as Best Buy and Circuit City. There are lending institutions that deal solely with computer financing. Usually, their terms for financing are more liberal than those of manufacturers and retail stores. Many of these lending agencies do not even require a credit check or a down payment. Therefore, individuals with bad credit have a good chance of getting a better deal with these agents. Banks and credit unions may also have computer financing programs. With banks, however, an individual with bad credit may be turned down or may have to make large payments. Also, approval for financing from a bank could take several days or weeks. With other methods of financing, the approval process usually takes no more than 24 hours. To get the best value for your money, a business owner should research all the available options and decide which would be most suitable for his or her needs. Computer financing for bad credit generally refers to ways for business owners with bad credit to get financing for new computers or equipment. Most computer manufacturers, retail electronics stores, and financing institutions have programs that allow individuals with bad credit to get the computers and equipment needed for a business. Companies that offer computer financing for bad credit typically require applicants to have a checking or savings account and a minimum monthly income. If the individual is on the verge of bankruptcy, they would be charged higher rates along with expensive monthly payments. Computer financing for bad credit costs more because financing companies take a risk that the buyer may or may not pay off the computers or equipment. The buyer also pays more to compensate for his or her bad credit. When a buyer meets the monthly payments, finance companies report this to national credit institutions, thereby improving the buyer's credit score. Other companies that offer computer financing for bad credit are rent-to-own businesses. A buyer gets to use the computer while paying monthly installments towards the ownership of a computer. These companies typically charge higher interest rates and payment plans in comparison to other computer financing agencies. Once a business owner with bad credit obtains a means of financing a computer, it is important to pay the monthly installments on time to improve his or her credit report and possibly lower the interest rate on the computer.